Hi there, traders. Welcome to the weekend wrap. It has been a rather eventful week. We've had movements up and down in the euro. The direction seems unclear, but one thing that is clear is that the commodity currencies, Oz, New Zealand, and basically all their crosses are just skyrocketing higher. Look at the Great Britain odd. Bam, bam. Break with their significant resistance hit there at 174.90. You can say the same thing for New Zealand. Broke the triangle, never looked back. But let's focus on the majors right here and see what we have going on. The EURUSD has been a bit of a pain of lately. It looks like it can't really gather any direction or momentum. We had that big spike down lower. That tested the 50 fib from this move higher. That was almost a week and a half ago now, or actually not 2 weeks ago. And then you can see we gradually broke higher, broke the top of the range, and right when it looked like we were going to get momentum, bam, pushed back down. What I'm going to say right now is what I'm keeping my eyes on. As long as this pair remains below this 50 fib at 135.62, and more importantly this 135.80 level, which is the top of this range, I think it's going to go down. And we can see a continued push lower, and my initial targets, it would be this 132.92, and then we could even see a push lower to the 130.90 level. To be honest, it baffles me at the moment why the pair is even considering going higher. All we're getting is negative information, negative data out of the eurozone, but it does seem to want to keep going higher. So you can just set your stops right around that 135.80 level, and no reason if you wanted to go short to fight it. It may have its mind of its own. If we do get above that 135.80 level, we could see a continued push higher into the end of the year, and I wouldn't even put these highs at the 138 level out of question. Let's take a look at the others. The Great Britain USD still in this consolidation zone between 163.30 and 158.75, and we need a break of this zone before we have any clear momentum in either direction. The pair has looked extremely strong over the last week or so, but it really hasn't broken out of this area. And before, if you want to play the range, it would be right at the top of the range, and you could go short at this point, but this would be the third time it's tested the top of the range, so we have diminishing returns on that aspect. So until we get a break of this 163.30, which is actually a long-term high, or the bottom of this range, I'm just going to remain sidelined on this pair at the current moment. The Aussie USD, you can see, broke below that 92.90 level, and with a little bit of authority, the pair is still crushing lower. What I would watch here for is that everybody in the world is watching this pair with that break, and the New Zealand USD, which looks like it's trying to break this zone here between 81.60 and 82. If we break below that, we have a definite holders head and shoulders in play, which would favor a move down to probably about the 78 level, 77 or the 77 trend line resistance. But everybody in the world is watching that trade, so we have to keep our eyes open for that. So the Aussie USD, same kind of thing though. We have a break of this range, and we have just seen a continued push lower. This 92.90 level now is going to be support, resistance, what used to be support. Looking for a continued push higher towards that lower towards that 90 level in the short term. New Zealand, same thing. We just went over, break of that range, boom, could see a push back down to the bottom here. Nothing set in stone in this cross yet. We haven't had a daily close below this 81.60 level, so we'll have to watch. The yen, now this guy's been interesting this week. We had a shot higher. I know everybody was looking for a push above this 160 level. And it looks like we definitely have that. Now we're testing this resistance at 101.50. If I had to take a look at this chart, though, you can see that the pair did break out of the triangle. And if we throw a line here at the 160 level, you can see that the pair has been up in this area once or twice and has been rebuffed. So we could call this this would definitely be a resistance zone right here. And if we get a close above that, then we could be on our way up towards that 103.50 level. If not, we could see a push back down. Another look at this trend line here, which is going to come around 98.50 at the current moment. Don't see any of the exotics. I already went over these yen crosses, just all shooting higher. We're at year-to-date multi-year highs on the 162.90 and the JPY. As long as it stays above that, consider a push higher. But I would be more concerned about this 160 level. I wouldn't like this risk reward on this pair. I'd look for a pullback in the current juncture. EURJPY, same thing, broke the range above 135.50, favors a continued push higher. That's all you need to know about in that pair. And the Swiss franc's become one of my favorites lately, and this guy can't get any traction anywhere. We had a break of this ascending trend line. Everything looked great, and it just won't do it. It just broke the low from this push higher. It was kind of negating it, but we're sitting at this trend line. So until this pair gets a clear daily break below this trend line, or I would almost have to say a break above, a clear break above this 91.90 level, or maybe even that 92.50 level, I'm just going to steer clear of this pair in the short term. That's it. If you guys want to check out these charts, they are all on the blog. You want to get up our daily currency watch videos and access to the Keen feed, where I go over all the trades that I'm doing real time, do stacker trades, we're building long-term swing trades, or do a lot of fib trades and more of the exotic pairs that have done quite well. The results are on the blog if you want to take a look at them. All right, everybody, have a great weekend, and I will see you on Monday. Sign up on the weekend. You can be in on Monday. Thanks.